Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe with Streamline Capital. Very excited for today's show. I know I always say I'm excited, but extra super duper excited for today's show. We've got none other than Stephen L. Richards on the line with us today. So, Stephen, how's it going?
It's going good, Brian. Glad to finally be on this show.
I know. It's taken me 2 years to get you on, but now we'll have a lot more to talk about. So,
Yeah.
that said, tell us about yourself and how you eventually landed into this real estate game.
Yeah, for sure. I started back in college. I was actually a collegiate athlete at BYU. I played football there and I played for 2 years. And during my second season, I got pretty injured. The doctor said I'd never walk again. And so I tried to play football some more, ended up getting more injured. I herniated a disc in my back, and it was a big deal. So that kind of steered me toward a different path. I coached for a little bit at BYU. I still coach football, but I was still kind of looking for a new path out. And I got an opportunity to start real estate in New York City. And I had lived in New York City before. And so going back was an easy transition for me. And so my wife and I moved out there right after college. I started doing real estate in New York and focusing on leasing and management
Mhm.
on a portfolio of like 1,500 units out there.
Were you previously interested in real estate, or was that move more to get back to New York?
Yeah. So back to New York wasn't necessarily a thing. I actually said
Mhm.
after living there for a couple of years, I was like, I'll never live here again. Like, there's no way. So it wasn't necessarily to get back to New York, but it definitely was for real estate. I was so naive back then in
Mhm.
terms of what real estate meant. I just thought it was buying and selling apartments and you manage those. That was my basic knowledge. And so going out there and getting a solid experience in a city that was so intense with so many different regulations and rent control and
Mhm.
it was so good for me to have that experience. And so being out there, I was in charge of all of the major capital improvements of all of our properties. I think we had 45 at the time or close to
Mhm.
40. So that included like all the renovations for elevators and facade and boilers, and then anything like apartment renovations for trying to increase the rent. So I was in charge of all the construction stuff. I was in charge of leasing all of our 1,500
Mhm.
units, and I was in charge of actually managing about 300 units while I was out there. So I got a lot of experience in that role. And
Mhm.
COVID happened, moved out of New York City. We had two kids at the time,
Mhm.
and moved back to Utah, where I'm from originally. And then my wife and I decided that it would be a good time for me to continue my career, but in brokerage on the sell side of things. And so I started selling retail properties, mostly single tenant net lease properties around the country. And I got in when the market was extremely hot. And again, like my experience, my knowledge of real estate was still pretty new. I obviously knew a lot more, but
Mhm.
being in brokerage was really good for me and my background there.
Yeah.
And then after about 3 years of doing that, I was doing okay, but the market did start turning. The interest rates started going up. And for single tenant net lease, it was really hard to make deals pencil. They're 10, 15-year leases, and everything's inside the lease. So you can't really make any adjustments like you can in multifamily or other types of
Mhm.
asset classes.
Yeah.
And so I got a call one day from a broker who I used to work with, and he's like, "Hey, I've been working with this investor here in Utah who's buying all these apartment deals, and one of his teammates just left, and he's looking to fill that role. And I thought of you, and I think you should talk to him." Happened to be Brian, right? Who I had that call with, and
Yeah.
the rest is kind of history. But after about I think it was like 2 or 3 months of talking. We
Mhm.
finally were able to pull the trigger and make that transition happen. I was ultimately in brokerage to do what I'm doing now. So
Yeah.
I'm grateful I didn't have to stay in brokerage for 10, 15 years in order to be where I'm at now. So
Yeah.
for me, this was a great transition.
Awesome. Now, going from one side of the fence to the other, I mean, brokerage, you play a middleman, now on the ownership side, what's the difference in that for you, and why was that attractive to you?
Yeah, I will say coming from the brokerage world and using those skills now has been very beneficial. But now on the buyer side and acquisition side and management side of things, what's more attractive to me is I'm not the middleman. I get to help make some of the decisions. I get to help operate the property. I get to help build value and continue the process afterwards. Obviously, there's pros and cons, but this is how I feel one usually generates long-term wealth and success.
Mhm.
Not to say, I mean, there's tons of brokers out there who have done so well for themselves, but brokerage is a deal by deal basis. The
Yeah.
really successful brokers actually are doing what we're doing full time. They're doing it on the side to continue
Mhm.
that wealth building. So for me,
Yeah.
it's just the end game. And that's why I'm super happy to be on this side, especially during the time of life that I'm in right now.
What you mentioned last, I've noticed that too. Like a lot of the senior brokers at the brokerage, when you start talking to them about what they actually own, most of them are dipping in and they're investing in the things that they sell. They have multifamily assets themselves. Some of them will invest in the syndication, some of them will invest with some of their clients. But you're absolutely right. I mean, it is a way to generate wealth, and a lot of people understand that. And I think the allure for brokers is it's something that they understand as well, which definitely helps.
Yeah.
I,
Yeah.
I tend to invest in things I understand, and I think everybody does.
Yeah.
Well, awesome. So let's talk about, one of my favorite subjects, Streamline Capital. And not necessarily Streamline. Let's talk about your role at Streamline and, kind of how that's evolved over time and what you've learned from, being boots on the ground and, nose to the grindstone.
Yeah, for sure. So started when I first joined Streamline and left brokerage, my main role was acquisitions of properties, which
Mhm.
made sense at the time. We were looking for new properties. I had really good relationships with brokers in Utah. And so for me, that was a natural transition where I was able to continue those relationships with brokers, find deals, underwrite those deals, and get to that point. But then there became a need where we have enough deals in our pipeline that we can look at, but we needed some more capital. And so I transitioned from underwriting and acquisition mode to investor relations, raising capital mode. And
Mhm.
for me, I've enjoyed that a little bit better just because I still have all of that knowledge of underwriting, and that's so important. It supports what I do now.
Yeah.
But being able to talk with all these investors and making sure that they're comfortable and that we're comfortable with them has actually been really good for me. So, and this job's really fun. Like this role that I do, I get to host events every month. I produce a newsletter. I talk with people on social media and build all these relationships. It's more of my scene, but brokerage has helped me with this role as well. I'm making a lot of phone calls. I talk with a lot of people on the phone, and that's what I did in brokerage. So everything that I'm doing now has been supported by previous experience, and that's what I think has been most beneficial.
Yeah, yeah, absolutely. One thing that I definitely want to hear from you about, and I think our listeners would, you've raised a lot of money in the last year, and it's been a pretty difficult environment to raise capital. So, can you give some tips or talk about your experience with raising money and how you've kind of developed that skill?
Yeah, for sure. I think I'll go from our phases, right? I think the most important thing that you need to realize and understand is who your investor is going to be. That avatar, that specific person that you need to focus on. There's so many different personalities. There's so many different types of people out there who have different criteria. And so for us, we were able to focus on four criteria of people that typically invest in our deals. So we found those four criteria and we've hyper focused on them, especially with our marketing efforts. From there, we were able to market to those four criteria, namely doctors, physicians, people who've invested in single family who want to get into multifamily, high net worth individuals who are salespeople, and some CXOs, people who have a lot of money but not a ton of time or resources typically invest in our deals. And
Yeah.
so those are the people that we focused on. And then we figured out geographical location. The closer they are to Utah, the more likely they're going to invest. With those categories of people, we then went to location and then we hounded the marketing effort there. And then after that, I mean, it was really rough at first. It was kind of feel. And once we nailed down our process, that's when things started really working out. Got some training
Mhm.
and figured out a good process from meeting to meeting to meeting to close. And I think that's what's helped the most and gotten us the most traction. So I think
Yeah.
those three things are key.
Yeah. And it's something I've found works everywhere, is you come up with a process, which is what we've done, and you refine it and you continue to refine it, and you make sure that you're taking your lessons learned and you're going back, and there's a feedback loop that needs to be there so that your process can continually improve. And that's essentially what we've been doing is, making sure that, hey, we're going to try this, and if it works, awesome, incorporate it into the process. If it doesn't work, iterate. And I say more than anything, we've been really good at iterating.
Yeah.
So,
And I think you're right. And I think because it, like you mentioned before, when you phrased the question, it was, how have we raised this amount of money in an environment that has been so difficult? Because it's been difficult, it has forced us to dive in deep to our processes and to our foundation and really make sure those are strong and that we can build off of those going forward. And so that super famous phrase, it doesn't happen to you, it happens for you. I think what we've been going through has happened for us so that we can build that foundation and build off of it going forward.
yeah.
And that's been super beneficial as well.
Yeah, absolutely. Absolutely. All right. So, any capital raising secrets you want to give out today? Any big tips to people who are just starting out?
Yeah, be really good on the phones. And I
Mhm.
know that's a silly thing to say,
Yeah.
and there's so many different things to that, but you need to understand what your tone of voice does. You need to
Mhm.
understand what your questions are actually saying to the investor. You need to understand where they're coming from. A couple books that I really like, one of them is Never Split the Difference, and the other one is Million Dollar Leads by Alex Hermosi. So
Yeah.
Never Split the Difference was written by Chris Voss and talks a lot about those techniques and things. And then Million Dollar Leads talks about those funnels and that process on how to make that happen and convert those leads. So for me, the secret would be learn how to talk well on the phone.
Mhm.
And then when you're communicating with an investor, you have to let them know how good your deal is. You
Mhm.
have to let them know how exclusive the deal is and why it's so important that they're seeing the deal.
Yeah.
And then you got to let them know that you're talking to a lot of people, so they don't have a lot of time to move forward with your deal. And you have to be honest. That's how you move people along, is making sure that they know that there's a time frame or a timeline that they have to adhere to,
Yeah.
and letting them know how good your deal is, and then letting them know that it's specific for them and how it can help them out.
Okay. One more question on capital raising tips. In the last year, I think, we were averaging 75, $80,000 in average check size. And we're sitting at like 150, 175 right now. How have we gone from like 50,000 and $100,000 checks to a lot of six-figure checks?
Yeah, that's a great question. I think some of the biggest answers to that has to do with, like you mentioned, us refining our marketing and
Mhm.
finding those people who like the deals enough that they want to invest more. What I've
Mhm.
actually found interesting is that the people who invest 200K or more are actually easier to work with than people
True.
who invest less than that. And so for me, it's easier to talk to someone who wants to invest that amount of six figures or more because they're at a different spot in their life where they can
Mhm.
afford to do that. And it's as if someone who is investing 50K, and so I think that has been very helpful, but also addressing their needs and showing them why they should invest and invest more with us. We do a really good job at providing more value to people who invest a little bit more, which is why I think we've been able to close a little bit more. But what I've been able to do is you can invest here, and Grant Cardone talks about this all the time, but
Yeah.
talking about upselling instead of saying how you can save or how little you can spend to get a little bit less product, you actually say you can actually spend more and get
Mhm.
even more out of that product. And I think that's been very helpful as with that mindset. It's my whole job is to get as much money from investors as possible.
Yeah.
And so at the very beginning, I say, if this deal checks all of your boxes and you like the deal, you want to move forward, how much are you considering investing in your next real estate investment? And they'll let me know. But I share with them, I'm talking with 5 or 6 investors this week. On average, our investor is investing between 150 to 200K. How
Mhm.
much are you investing? Well, what's the minimum? It's 50K. But like I mentioned, I'm only looking for X investors. And then they're like, okay, well, I could do 100 or I could do 250 or I could do 200. And so that's how it kind of goes. And I think that process has really helped us increase the value of our investor.
Yeah. And I would say previous to that process, what I had been doing is not focusing on the high dollar checks, focusing on the investment itself. And then, people almost always come in at the minimum, right?
Mm.
So if there is a minimum and they're unsure how much to invest, most people are just going to hit that minimum. But by reframing that, and that start question is brilliant. How much are you considering? Because
Yeah,
you let them set the baseline and not the minimum amount in the investment set the baseline, number one. And number two, you're following it up with, hey, our average investment is, and throwing out a number, a lot of people want to meet it. I mean,
yeah,
you and I are both competitive, and I think a lot of people are, and so if somebody comes out and says, I did X, you want to one up, people want to one up each other. It's true, so but yeah, that kind of sets just a slightly different framework, in the investor's mind where, hey, if the average check's 150 and I can do 150, I'm definitely, I want to be above average, is I
yeah.
think kind of what that puts in the investor's mind. But
And it makes them think, why are people investing that amount?
mhm,
And so now they're going to look at this deal a little bit different. They're going to look at the reasons why people are investing more instead of figuring out why they should invest less.
yeah.
And that helps too.
Yeah. A lot of it's positioning and a lot of it's just kind of setting that expectation. Now, admittedly, something else we've done is we've also created a tier of investment where if they hit a certain dollar amount, they get better returns, a higher pref. Actually, I'm going to hit that question to you since you're the one talking with 90% of the investors. How does that extra tier help you to get the bigger checks?
I think if people are looking for a specific return, it really helps.
Hmm.
If they're just looking for a good investment, I don't know if it helps as much. And what I mean by that is if someone has a specific investment criteria where they need to earn X, then we present them and we focus on
Hmm.
here's what you'll get at 100K, here's what you get at 250. And then we really hound 250 because that's what's going to get them closer or surpass what they're looking for. If they're looking for a good return or a good investment, those people need a little bit more convincing on why they should go up to 250K if they can. And so for me, how I phrase it is really seeing where they're coming from at the very
Yeah.
beginning. And then we focus on it from there. But yeah, most of the time it's the people who are looking for a specific return. And another reaction I actually get too is,
Mhm.
hey, listen, I know you said that you would do like 150, maybe 200, but if you can get to 250, we can get you these returns instead. And I
Yeah.
hear them perk up. They're like, oh, that's actually interesting. I didn't realize that it was that much more. So and sometimes they're just unaware because they have a fixed number in their mind.
Yeah. Makes sense. Good. Well, we're getting close to we try to keep these episodes in a certain time frame. We're getting close to that. So a couple of questions just to finish things up. Question number one, what's next for you?
Yeah. So this year I've raised about $3 million. Hopefully before the end of the year, it will be 4 million. I hope by next year I can get to $5 to $6 million raised. And hopefully it's way more than that. Hopefully it's like 10 million. But with what we have now, I think that that's a real possibility.
Yeah. Yeah, if we can raise five, that's a couple of good properties right there. Next question, if you had to give advice to somebody just starting out in this multifamily journey, what would that advice be?
Get your real estate license. I
Mhm.
think there's so much benefit in getting a real estate license. It's cheap. You don't have to use it, but all of the information is so good for you to understand. It's really a good crash course. And then I personally would figure out what you want to do in real estate. You don't have to do that right at the beginning, but you do need to figure out what you want to do because there is so much more than
Yeah,
buying, selling, and managing.
it's a very wide field. So,
Very wide field. And for example, I didn't even realize that raising capital was a thing
mhm.
until joining Streamline. I didn't realize that there's people out there who get paid as broker dealers to raise capital. I didn't realize that. And
Yeah,
so there's so much involved in real estate. You just got to figure out what your niche is and what you're good at and then go there. If you're really good at single family homes, focus on single family home stuff. But for me, commercial makes way more sense and fits my personality way better. So that's why I'm at where I'm at.
awesome. Awesome. And last question, how can listeners learn more about you?
Yeah, I have a couple of social media. pages. I'm pretty active on LinkedIn. I also have a social media page on Instagram, and that one I think is scg.steven.richards or something like that on Instagram. But
Yep.
yeah, LinkedIn and Instagram are the best places to find me. And
Mhm.
obviously, our website is streamlinecapitalgroup.com. You can find us there too.
Yep. Awesome. And we'll have all those links in the show notes for anybody who wants to reach out to Steven. So that's it, Steven. Thanks for coming on the show.
Thanks, Brian. Appreciate it.